India today stands at the forefront of global growth, offering multiple opportunities across sectors as well as market segments. As India continues its journey towards becoming one of the world's largest economies, retail investors have an opportunity to capitalize on its expansion. To help investors tap into this potential, we are excited to introduce the Groww Multicap Fund, which seeks to provide exposure to large, mid, and small cap companies, aiming to offer a diversified approach to capturing growth across India's dynamic market. In today's session, we're joined by Ms Gayatri Hatkar from Arthamitra Financial Services, who aims to provide clarity on navigating India's diverse investment landscape. Gayatri will explore the key factors driving India's growth, the role of large, mid, and small cap companies in this development, and how investors can strategically position themselves to benefit from this. This session aims to offer practical insights for those looking to benefit from India's rapid transformation. Let's get started. Gayatri, hi. Thank you so much for taking time out and chatting with us today.
Hi, Karunya. It's my pleasure.
So this conversation is, of course, all about exploring the opportunities in India's investment landscape. First up, I'd like to ask about the Indian economy, and it's been touted as one of the fastest growing economies in the world. What, according to you, are the factors that are driving this growth, and how can retail investors benefit?
Okay, so now talking about India's growth currently. So the only thing that I have been hearing for past, say, a few months or a year is that you are at the right time and at the right place. So now when we see the world population is around 800 plus crores, and out of that, the Indian population is, say, beyond 145 crores. But out of that, if you closely observe, 60 to 70% of the population is in the age group of, say, 25 to 45. So if you analyze, this is mostly the young population, right? And this young population is majorly more driven or maybe say attracted towards a luxury lifestyle or a better lifestyle, you can say. So eventually all these factors add up to a lot of more increased consumption in every sector that is possible. So now this increased consumption is eventually leading to a lot of growth in the economy. Say, just for taking an example, more than 82 crore people already have an access to the mobile internet. Okay. And in the last decade, we have seen that e-commerce and fintechs have played a vital role in increasing the digital penetration. And much from the government side, they have done a great job, a phenomenal job rather, by introducing reforms such as GST, demonetization, Jan Dhan, Aadhaar. And because of all these transformation, there is a lot of increased ease of doing business. So there is a lot of more startups that are coming up, and rather than going for traditional, say, jobs. So due to all these factors, a lot of retail investors can definitely benefit from this diversification and create a lot of long-term benefit.
So, with terms like large cap, mid cap, small cap, which are often used, in market parlance, what do they mean for an investor, and why are they important in the context of Indian market?
So that, so now considering large caps, mid caps, and small caps. So majorly large caps are nothing but your first stop, well-established 100 companies, whereas your mid caps cater to mid-sized companies with a higher growth potential. Whereas small caps are the new businesses that are growing very fast. Okay, so each market cap has unique sector, and like fintechs is again a unique sector for the mid cap. And similarly, agrochemicals is a sector unique for the small caps. So hence diversifying your investments in different market caps along with different sectors is very essential.
India is a huge market, and growth opportunities are everywhere almost. How should retail investors decide where to focus their investments? Should they spread their money across various sectors, focus on one? There are so many questions for retail investors. So, how should they navigate the space?
So currently, I have been getting this question from many of my friends as well. So during these times, I always would prefer spreading your investments across various sectors because it will help you in diversifying your risk. So the major reason why we invest in mutual funds is for the diversification purpose, right? So, however, over diversification may lead to limiting your upside also. So sometimes when we say about diversification, they take it too seriously and maybe sometimes over dilute the portfolio. So that is also not advisable because due to cyclical nature of sectors, different sectors
Hmm.
outperform at different points of time. So there is nothing specific कि अभी ये चलेगा तो यही चलेगा या फिर इसके बाद यही चलना है. तो ऐसे नहीं है.
Hmm.
Therefore, maintaining a balanced approach by investing into different sectors becomes important.
And what role do you see government initiatives, whether it's Make in India, National Infrastructure Pipeline, play in creating investment opportunities, and how can retail investors, more importantly, benefit from this?
So personally, I have been myself a very big fan for the Make in India movement, which started way back in 2014. So currently, if you see Karunya, these are the offshoots that we are trying to experience
Hmm.
right now. So the main offshoot you can say is manufacturing happening in India, which is a very big boom. So now the positives of this moment are nothing but a lot of increased opportunities and a lot of imports have reduced and hence making India an import substitution. So that's almost a dream for every Indian, I would say. And now talking about the national infrastructure program that is run. So government is
Hmm.
trying to accelerate a lot of India's infrastructure development, and that development is majorly served in various sectors such as railways, roadways, energy, and many more. And investors like us who are going to invest in such companies or sectors will definitely benefit from the associated growth.
We often hear the phrase trying to time the market. So, what exactly are the risks involved or associated with trying to time the market in a rapidly changing market like India? And how exactly do you think can investors balance those risks while still pursuing growth?
Yeah, so this is my personal favorite. I would say that what I personally believe that staying invested for a long-term perspective can help in balancing the risk and the reward. See, everybody is
Hmm.
interested in the reward, but not very many people are interested in putting things at risk, right? So sectors are cyclical in nature, and therefore there are sector rotation that takes place in the market caps, which helps the market to outperform at different points of time. Therefore, diversification is essential. Hence, timing the
Hmm.
market can lead to missing out on potential gains, is what I feel.
So, Gayatri, with all that is going on in the Indian markets right now, could you share your thoughts for our viewers on a multi-cap strategy to mutual investing, given the dynamic nature of market that we're witnessing?
Okay. So, as mentioned earlier, investing in a diversified approach can help us cater to investing into different market caps and different sectors. Now, why it is essential? Because multi-cap strategy itself is all about investing in 25, 25, and 25. That is into different market caps such as large, mid, and
Hmm.
small. And the rest 25 is fully flexible. So, depending upon the inclination, we can adjust it accordingly. Therefore, it provides a disciplined approach to participate in India's growth story.
All right, Gayatri, it's been great chatting with you. Thank you so much once again for being with us on the show and sharing your insights with our viewers.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.